Good morning, everyone, and thank you very much for joining me. This is the morning market review. It is Wednesday, the 25th of October, 2023. I see my spelling just got an extra R in there, beg your pardon. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address rshaw@fxcm.com. And of course, if you'd like to correspond, that's the email address to forward your communication through to. I'm just going to go ahead and bring up our disclaimers. I'll go ahead and bring up the high risk investment warning. I'll keep this on screen for a few moments. Hey James, good morning to you. Good morning Raj. Good morning Kim. Pleasure to have you all on the webinar. Thank you everyone for signing in this morning. All right, let's just bring up the market commentaries disclaimer. Good morning, Matthijs. David, pleasure to have you on the webinar. Welcome. All right, and our references, MarketScope 2.0 and TradingView.com. We'll go straight through to TradingView and just start off by taking a look at the real yield. And just interesting to see that the last few days, let's just put a box around it. You can see that the real yield is moderating somewhat. The yield has been a key driver for the US dollar. It's been a key driver for the financial markets. We carry on monitoring the real yield. The key question, this is the key question, how much higher can it go? My opinion currently at the moment, subject to correction, is we must be pretty much near the high, the apex of the current cycle. We'll see if that proves correct. If I add an RSI, let's just add in the RSI. We did point to the fact that there is a divergence. Divergence, not something I look at all that often, but where I think it is helpful. The divergence, let's just say that is suggesting a slowdown in momentum. Does that make sense? And I think it does make sense when we take a look at it on a or even a monthly basis, because you can see that we are overbought on the longer and weekly. And even if we go through to the monthly chart, we very overbought there. Just change it up to. So the idea that there's sort of divergence here, not too difficult to see why. Slowdown in momentum. Why would there be a slowdown in momentum? Because I think we pretty much near the highs. I don't think there's much more lift to the real yield. I'm going to just tag on subject to correction, and we'll monitor that. We'll continually monitor that. So what's the big deal about that? Well, we said it's a key driver. It's a key driver of the US dollar. So I'm just going to go ahead, bring up the US dollar here, and we can see what type of bias it has in the market. Is the US dollar kicking up, or is it moving down? So this is interesting. It does look like there has been some support that's coming at this line here, and what we said yesterday is there's really two scenarios. There's actually three scenarios. So the first scenario would be that we're getting some sort of higher trough in here, so we'll get some sort of corrective move, and then we move to the upside. If that happens, I would suggest that real yields are moving higher, and that would change the presumption that I'm operating under. That would be the first scenario. The second scenario would be where we actually get a change in trend, where you get a lower peak followed by a lower trough. The third scenario, actually, just to throw this into the mix, is that we actually churn. We just churn sideways. So those are the scenarios we have here. What does it mean for us as traders? Well, I think as traders, we've got to take our cues from current market action. And the current market action does the dollar above the 30-week moving average. The 30-week moving average is pointing higher. Let's just see what's happening on the daily chart. Okay, and yesterday, a really strange bit of market action yesterday, where you kind of saw the dollar sell down, and then it actually bounces, and we're in the neutral area. So we're kind of in no man's land here. No man's land is between the two blue Bollinger Bands. I think that we need some sort of directional cue, either to go to zone 1, which will be in the between the upper blue, the upper red, or sort of a cue where we go to the lower zone 3, the lower band, the lower channel, which is between the lower blue and the lower red. The fact that the dollar sitting in neutral area, I think that's going to make market trading potentially tough. What we can say is, well, all right, perhaps we've got this movement from zone 3 into zone 2, so some sort of relative strength movement forward. If we've got some sort of relative strength movement forward, then obviously the areas that we look at would be support areas. Let's go down to the hourly and just see how support levels are holding here. Okay, let me zoom out slightly. And you can see it's the central pivot that seems to be playing the active support role at the moment. And if the central pivot is playing the support role, we would want to see the cross to the upside, okay, by the EMAs. In other words, the green EMA to cross bullishly above the orange EMA. That would be trigger 1. Trigger 2 would be for the stochastic to push above and move up towards the upper quintile. This is interesting. It's a change up from yesterday. The idea here is, let's just go back to the real rate, is that the real rate has been coming down. There is this sort of slowdown in momentum here, which one would suggest, which would suggest to one that perhaps there would be some pressure on the greenback. That doesn't seem to be the driving theme for the start of the day today. In fact, the real yield at the moment, just holding between yesterday and today, just holding pretty stable. And if we take a look again at the start of the day, it seems as if the greenback is on the front foot. All right, if the greenback is on the front foot, what can we expect from the euro? What can we expect from cable? Well, let's take a look at the charts. I would expect that there would be some sort of pressure there. Let's see if that is indeed the case. So we'll bring up the euro first. Okay, and it does look as if it's rollover here. It does look as if the trigger is going to be to the downside, but it's a dual trigger system. Okay, in other words, yes, we might get a cross of the EMAs. I'd like to see the momentum comply with that and push down. And if we get those two triggers, we should look for a movement to the lower quintile. So let's just take a look at dollar and euro together. Just once again, just try and get some sort of directional bead on what we can expect here. So we go back to US dollar. Okay, just bear with me while we bring that up. You're looking for a trigger 1 But then remember, we're still looking for a trigger 2 as well. If we don't get those 2 triggers, we're kind of floating in no man's land. And if we're floating in no man's land, it's not surprising because the daily chart is in zone 2. So we really want to see the correlation between the trend following exponential moving averages and the momentum driven stochastic. Go back down to the euro US dollar. Okay, and then we want to see the dual triggers as well. Let's just take a look at where we're sitting in terms of the zones on euro. Okay, so sitting in no man's land. We're on the border. We're on the border of zone 1 and zone 2, but we have driven into no man's land. Again, no man's land always more problematic than if we're in the zone 1 or zone 3. Zone 1, zone 3 have biases. Zone 1 has the bias to the upside. Zone 3 has the bias to the downside. Zone 2, neutral. So how can we sort of interpret what's happening? Well, the relative move. So perhaps one way to look at this is that the euro looks to have moved relative to the relative weak side. It's gone from zone 1 through to zone 2. So the fact that the dollar seems to be showing some sort of relative strength and the euro seems to be showing some sort of relative weakness seems to make sense. Let's just take a look and see what's happening on cable side. See if there is something to be said on pound US dollar. All right, so pound US dollar, again, it's moved into zone 2 from zone 1, so there is a relative weakness here. We have the same issue. The same issue is we a-directional. Why are we a-directional? Well, we're not in zone 1 with up bias, and we're not in zone 3 with a down bias. We're sitting in the neutral area. Here you can see that the RSI has popped below 50. If we've got this relative weakness in the cable pairing, then resistance becomes compelling. Let's take a look at the hourly and see what the hourly chart is suggesting. And it does look as if we're getting a roll down. Okay, we don't really have the crossover yet, but remember that's only trigger 1 out of a dual trigger system. Okay, so the stochastic would still need to cross, and if we get the cross down in the EMA and the cross down in the stochastic as well, then we would want to see the momentum build, and that would be suggested by a stochastic moving into the lower quintile. A little bit difficult just because we seem to be floating in that neutral area for all the pairs we've looked at this morning, dollar, euro, cable, right? So the neutral area, a-directional. What is happening on DAX? Let's just take a look and see what's happening on the stock market. I would expect, and again, we'll see if there is going to be some sort of dollar bid, then maybe there's going to be some sort of pressure on DAX. That would be quite interesting because I think the Chinese markets were quite strong overnight. Let's just take a look at DAX. Okay, we'll start off with the daily. All right, so we are in zone 3. We are in zone 3. It was a strong risk on day yesterday. I'm concerned that if the dollar is showing a bid, that may indicate that money is being rotated into safe haven flows. If that is the case, then perhaps there's going to be some sort of pressure. Perhaps there has to be some sort of pressure on the. Okay, Kim, cheers. Speak to you tomorrow. Then there has to be some sort of pressure on the DAX. Well, it does look as if we're getting some sort of rollovers here. Just look as if we're getting some sort of rollovers. Okay, if it breaks that then pivot, we could fall to S1. We've already got the stochastic pushing over. So it does look as if there is some sort of pressure to the downside as we take a look at DAX. I just want to take a look at the Chinese market just to see how that. There was some an announcement of some stimulus that came in overnight. Let's just take a look. Let's put in the China 50. All right, we'll just bring that up. I just want to have a look and see how it traded. Okay, there is a red handle there. So it just seems that that risk-off environment is the sort of primary force of at the start of the day. The last chart I want to show you is gold. Something's happening that is very interesting on gold. Let's just bring up XAU USD. And since the outbreak of the conflict in the Middle East, gold has certainly come under scrutiny, but it's attracted flows. A lot of money has gone into the yellow metal. So what you can see is we take out the downtrend. The downtrend has ended because we've taken out this peak over here. Okay, the downtrend is in. Strictly speaking, for gold to be in uptrend, we should get a higher trough followed by a higher peak. So we'll keep an eye on that, but it is certainly above the 30-week exponential moving average, and the 30-week exponential moving average has turned up. We've also got the RSI that has popped above the. Something that's interesting, and we'll do more work around this. But if you take a look at our triple moving average, so these are all exponential moving averages, and the green is the 20-day exponential, orange is the 50-day exponential moving average, and the red is the 200-day exponential moving average. You've got this interesting crossover where you've got the green on top of the orange on top of the red. Well, that's called a bullish stack. So bullish stack. And if they develop angle and separation to the upside, of course, gold will be trending higher. So sort of here, you can see bullish stacks over here, green above orange, orange above red. It doesn't always go smoothly. I mean, but the nature of the EMAs, we've got one short and one quite long moving average. But the fact of the matter is, this is an interesting axis right over here. Gold, I think, is something for us to keep an eye on. And it just looks all of a sudden that 2000 level is now something that is potentially reachable. Okay, we're 1970, so not too far ahead. 2000, which is the all-important psychological level for gold. That's as far as we're going to go this morning, because I'm going to move to our next webinar, which will be the Crypto Minute. But before I do that, I just want to ask if there's any questions. Can you go ahead and type the questions that you guys have? Any questions? Okay, nothing coming through. So let's conclude. At this point. Please join me for the Crypto Minute. See you on the other side. Thanks very much, guys.